Hey, on today's video, we're going to dissect some Dave Ramsey advice that he shared not long ago on TikTok about financial planning, retirement, some lessons that he wanted to share in bite-sized formats. If any of you know Dave, he takes a no-nonsense approach to personal finance and has an entertaining way of talking about it for sure, and also gets into wealth building and debt management and things like that. So we're going to tune into some of his recent comments, get Janine's reaction to some of these Dave Ramsey TikTok. So, Janine, you ready to do your first react video? This is
Great,
a thing
yeah.
on YouTube. You do reaction videos. So
Oh, okay.
All right, let's do it. Taking center stage, our conversation about Dave Ramsey's TikTok advice. All right, Janine, first piece of advice from Dave Ramsey. Let's take a look at the TikTok.
Don't invest in anything you can't tell me how it works, and don't invest in something because you're excited. If your pulse rate's up, you're getting conned.
I am 100% simpatico
Okay,
with him because I've had a lot of people ask me about certain things, Bitcoin being one of them.
Talk about something with a lot of emotions and conversation about it, and that gets people excited.
Well, and there's a lot of FOMO because it's in the news everywhere all the time. And not recently, but for a couple of years, have you noticed? It was really in the news a lot in 2019, 2020, somewhat in 21, not so much this year, which is really interesting. But that was the same, what he's saying is exactly what I would tell people. If you can't tell me how it works, why are you going to throw money at it? How do you control where the money goes? How do you access the money? If it's really algorithms on somebody else's server, how does that work? And that's usually when I get people to stop and think through, well, I don't know, but I want to be this and it's going to go to that. I go, they're always saying that. Of course they're saying that.
Yeah.
But yeah, I'm with him.
It's really hard to kind of buck that fear of missing out mentality. We talked about that in a recent video when we discussed, Gen Z and spending more money now versus saving it for retirement. But you see it with investments with any generation, with any age. When you get stirred up, you make those kind of quicker investment decisions. And it's just hard to control that.
It really is. And it's become harder than ever because of the platforms that you can access. That anybody can access. The Reddit platform where everybody was on,
Wall Street Bets and
Wall Street Bets. Going after GameStop and the whole thing with the hedge fund. It was this huge pile on to the hedge fund manager, which was amusing to watch. But the people who got in late with buying GameStop got crushed.
They did.
So
there were a lot of people that won, but there were a lot of people who lost at the end there.
Yeah. And actually, one of my nephews was asking my brother, "Hey, should I do this?" And we're both of us are like, "No."
Yeah, you already
you're
missed
late to the game.
Right?
So you have to be careful if you can't explain what this is. I mean, structured notes are not that hard, but a lot of people will ask, how does this thing work? If you can't explain it, then you probably shouldn't be in it.
Okay, very good. Good agreement there on Dave Ramsey's first TikTok. All right, let's take a look at another Dave Ramsey TikTok, this one having to do with timing the markets.
Do not jump in and out of investments based on what you hear on the news, ever.
All right, so Janine, we've got, we want to make informed decisions. Dave's talking here about seeing the news and wanting to make investments based off of that information. Sounds logical on the front side of things, but sounds like there's some dangers here that Dave's bringing up.
Well, definitely. As by the time you read the news, the market's moved. So by the time you go to invest in something, you're a day or two or three late by the time it gets reported. So you're reacting to a news headline, which was, sent out yesterday or the day before, and it finally hits the hot sheets, and you're trying to follow that. By the time you make that move, you're way behind whatever that investment is. So people who knee jerk and chase will destroy a portfolio. And there's all kinds of data on that. Occasionally somebody gets lucky and then they crow about it, but then I want to know, okay, what happens later? How long are you keeping that? It's not good, especially if you're in retirement or you're in near retirement. That is not the thing you need to be doing.
Is that a good lesson or what? People will chirp and talk about their successes, but rarely will they go and ring the bell about their defeats.
That's exactly it. Yeah. And then, people who are day traders, one time a CPA was asking me, what do you think of this? Because he had 400 trades that he was reporting for tax
400.
purposes.
Wow.
And I said, and what was the net? He netted $100.
$100 on all that back and forth, all
that back and forth. And I said, and what are his taxes going to be?
Yeah.
So nobody talks about that.
Right.
But, yeah.
Oh, man. Brutal.
Yeah.
Well, there you go. Good one. Another reaction to another Dave Ramsey TikTok there. All right. The third one's going to be about short-term and long-term decision making. Let's see what Dave has to say.
If you're not careful, you make short-term decisions which keep you in a short-term situation. If you make long-term decisions, they're almost always painful now and awesome later. I want to ask myself, 10 years from today, where do I want to be, and which of these decisions take me there?
All right, Janine, so what do you think about that? Kind of that old delayed gratification and retirement planning mentality coming to the forefront here.
Yeah, there's a lot to be said for delayed gratification, because anything worth having is going to take a little bit of work and discipline and stick-to-itiveness to be successful at. I actually had a young guy years ago say he invested some money, and I explained everything to him. And 6 months later, he pulled the money out of the market. And I'm like, "What are you doing?" Because the market's roaring. I mean, he made 10% on his 6 months. So that was, it was great, but he wanted profits now. And I said, there is no such thing as profits now. Anybody's telling you that is selling something.
Sure.
Okay. So yeah, you've got to have a long-term, even if you're young, what's the long-term prognosis for investing? It's 100% positive. How should you be doing that? If you want to take some money and bet on the market, then you only take the money that you can afford to lose.
Yeah.
So, it's got to be a long-term, conversation that you're willing to stick to it.
Just that mindset puts you in a whole new realm, right? Mm-hmm. Thinking for the short term versus thinking for the long term then just dictates everything differently from there.
Right.
Okay. Very good. All right. Final TikTok. This one from Dave Ramsey had to do with retiring wealthy and how they got there.
People that retire wealthy, it wasn't an accident. They didn't get to wealth, they get to retirement and go, how'd that happen? Where'd that come from? They know exactly where that money came from. It was an intentional act, year after year, month after month, paycheck after paycheck, being deducted into their 401k, into their Roth IRA, into good mutual funds, year after year after year after year after year after year. It's just not sexy.
I like that one, Janine. That one, just makes a lot of sense and is said very well, I would imagine.
Yeah. And that's actually the truth of it, is working with folks who've been, working and saving, investing for a long period of time, have done very well because they're the millionaires next door.
Right.
They tend to be frugal. It doesn't mean they don't travel or enjoy things. It means, but they tend not to be ostentatious in how they live or spend, and they just save it. And so now, they retire after 40 years and they've got 2 or 3 million or 4, that's more common.
Habits.
It happens, but it happens over time. And that's the hard thing for some folks to grasp when you have in the news all this chirping about people who make it rich quick.
Rather, the steady habits are what lead to the success.
That's right.
Yeah. And you'll know it along the way. You'll see that building and growing. I imagine you often meet with people, Janine, where there may be a little bit of a surprise of like, oh, we're in better shape than even we thought. But I doubt anybody's getting retirement and going, oh my God, how in the world do we end up with $1 million or $2 million or whatever the case?
Right. And I have had people say, I never thought I would have this much money ever in my life, but they have been diligent about their savings and, investing and living within their means along the way. And then you get to your 60s and go, wow, look at what we have here. And now I don't have to worry so much, with proper portfolio allocation. Their distributions are going to be fine because they don't expect these large things, to happen. And so, and that's where the success comes from. It's discipline and and sticking to the plan. So.
Well, discipline is something you know about, Janine, with your 20-plus years as a naval intelligence officer and now 20-plus years as a financial advisor and planner. And great reactions to this Dave Ramsey advice here. Sounds like you were in pretty much alignment with a lot of this, so that's great to hear. If you would like to get some guidance from a true financial professional, that's Janine. Talk to her about your situation. Offices in Maryland and Ohio, but can serve you from anywhere across the country. Don't hesitate to reach out. You can book a time to meet online at theuswealthadvisors.com. Link in the description of today's show. And you can also call 443-718-6311. Janine, thanks for your reactions.
Thank you. Talk to you soon.
See you next time right back here on Rockin' Retirement.
Information is for illustrative purposes only and does not constitute tax, investment, or legal advice. Always consult with a qualified investment, legal, or tax professional before taking any action.